everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen. I am a chartered professional accountant located in Toronto, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. I recently got a lot of bad press, not bad press, but bad comments about real estate investing, how people should not invest in real estate, and real estate on its own should not be an investable asset to begin with. And I thought we are actually on a mission to create more housing unit. That's the reason why I have you here, Rachel Oliver from Clover Properties here, to really talk about how you could invest with a mission. And that's how Rachel does her investing as well, and help many other investors out there to create housing and help people who want to buy a house but not able to yet to get there. And welcome, Rachel.
Thank you for having me.
Rachel, I know you do something called rent to own for a living. What does that really mean? And how does it help investor as well as, I guess, potential home buyers out there?
Well, it solves a big problem of not being able to get into home ownership because the banks are very strict. And there's other complications why people cannot get into the market. So this really solves a problem for a very niche group of home buyers. It's not for everyone, but for the ones that do qualify, it makes a big difference and it can change lives for the better.
Yeah, tell us a little bit about how it helps people.
Okay. So let's look at the landscape of the home buyers out there, and we can look at it in the form of a triangle. So say we have three groups. We have a group of home buyers that are probably never going to own because they are outpriced. Interest rates don't match with their incomes. They might never want to own because they have jobs that require them to move a lot, or they just don't want to be bogged down by owning a property. That is fine, and they will continue to be driving the rental housing demand, which is great. Then we have a group of people who are able to meet the strict lending criteria today, the people that have the incomes, the down payments, that have realistic expectations of what they can afford, those guys are getting into the market now. And then in the middle, we have a group of people who are almost there, but they need some time. And this is that group that we're working with for rent to own. So rent to own helps these people get into home ownership faster. How do we do that? Well, we help them build down payment higher. They have to have a little bit today, but saving up a down payment is so challenging because prices keep going up and living expenses are out of whack. So trying to save up while you're renting, dealing with higher expenses and demands of life makes it difficult. So they have a little bit today, but we need to help them build up more. Then the other thing we need to do is we have to help them build up credit. So they might have a decent credit score today, but we all know the better your credit, the lower the interest rates you can access. So lower interest rates mean better affordability, easier on the wallet each month. So this credit and down payment combination is what this group of people need help with. And that's where rent to own comes in. And how do we do that? There's a group here called investors. So this is us. And we help this group because we take title on the property. We qualify for a mortgage and we hold it for 3 or 4 years. And that's the typical term of the rent to own. What does the investor get from this? Well, first of all, they make monthly cash flow. Monthly cash flow is king. Investors use that to maybe offset their own living expenses, which are on the rise, or maybe they have rental properties that are in the red right now. So the the cash flow from these rent-to-owns can help offset some of those losses. And the other thing is that we're making money on the future sale. So the investor is holding a property until these home buyers are ready in terms of down payment and credit, and they make profit from the sale at the end. Fast forward 3 or 4 years. In the process, they have zero maintenance and repairs.
Great.
Which makes it basically a hands-off turnkey experience while you are investing with a purpose to give families time to become homeowners.
That's amazing. That's amazing. So now that we covered the overview, why we're doing what we're doing, is it even possible to go through some, like an actual structure of the deal?
Yeah, absolutely. So the typical deal is usually in the entry level price point. So this is another wonderful thing for a lot of investors. We're not trying to buy duplexes that there's a lot of competition for. We're buying single family residential homes, and those can be starter homes like a condo, like a townhouse, or potentially even a duplex that has rental income. But we are buying move-in ready properties. So there's no additional overhead in terms of holding costs, in terms of renovations. You basically start to cash flow from day one. So let's say entry-level prices are around $500,000. For the average property. So that means the investor would be tying up about $100,000 of their own capital for the full 4-year rent-to-own term. Every month, they are making a monthly cash flow. So in today's high interest environment, our cash flow, of course, is a little bit strained because cost of borrowing is so much more expensive. So we're seeing cash flow dropping a bit.
What kind of cash flow are we talking about? Like, assuming that the investor put 20% down, we're not talking about people borrowing to fund that 20%. So it's not 100% finance property. How much, it's a 20% or 30% down payment type of property, what kind of cash flow are we seeing?
So if the down payment is coming from my personal savings, my cash flow is going to be higher because I don't have the extra monthly expense to pay the bank. So I'm probably around $700 a month.
Wow, that's really good.
After all expenses and paying off the carrying costs. Not bad.
Yeah.
And when I do need to leverage and use HELOCs, that still pays off too, because I'm seeing maybe about $500 a month cash flow after I pay my HELOC interest each month, and of course other carrying expenses.
Tell me about the deal after. And who doesn't want $700 a month?
Front of the line access for you.
Yes. So that $700 a month is paying, like that includes paying down the mortgage, right? After paying the full mortgage. It's not just $700 taxable income, because that's different terminology.
No, that's after you've paid the mortgage, after you've paid the insurance and the property taxes.
That's amazing, because there is no maintenance and repairs. And the tenants take care of the snow removal, the tenants take care of the lawn. You don't have to worry about those.
That's the outside landscaping part, but they also take care of the things that can go wrong inside. Leaky toilets, leaky faucets, broken windows, broken light bulbs, you name it. All the stuff that bogs down the average rental housing provider is off the table with rent-to-owns.
And the tenants know that it's their responsibility?
Absolutely. So one of the things to consider is, we're dealing with people who are trying to become homeowners. This is homeowner mentality. Rent-to-own is really a financing strategy. It's an alternative financing strategy for home buyers who can't get a mortgage with the banks. So when you are getting a mortgage with the bank isn't on the hook to fix things that go wrong in your property.
Oh, it's true. Now that you put it that way.
The same thing applies with rent to own.
So, okay, now like you talk about $700 and today's market, the property price hasn't gone up. So when the investor is choose to do a rent to own deal, they're committing to sell the property to the tenant buyer a few years down the road, right? What kind of commitment, when you set the sale price, what kind of appreciation rate are you working with?
That's a great question. A lot of investors think that their profit is tied to having a higher appreciation to set that rent-to-own price at the end of the rent-to-own deal. And I would caution those investors from overthinking it, because our real estate market fluctuates. We're in uncertain times. I mean, we've been doing this for 13 years, and we have held the appreciation at a very conservative 4 to 5% range.
Oh, okay.
Even in times when we were seeing 20, 25, 30% annualized appreciation. The benefit goes to that tenant buyer. If we have a blip year where the appreciation rate was crazy high, extra equity goes to that home buyer because they also took a chance on the market. They also took a chance on the rent to own. And they paid faithfully, they maintained that property, and they get the benefit of the upside. But there are circumstances where rent to owns don't come to a successful outcome. It's a small percentage of home buyers who might get divorced or might get separated. Not the rent to owns issue, it's their personal circumstances, but if they don't have the same household income that they got into the home for to need that time, then we have to look at other scenarios. And in that case, the investor benefits from whatever's happening in the market. So if property values are up at 16, 15, 20%, the investor can sell that property on the open market and benefit from the upside. But generally, we keep the appreciation rate very conservative because that's where the market really is. We don't know what's going to happen 4 years from now when these people are exiting.
Yeah.
And we don't want them overpaying for a property because that will just compromise the success of that rent to own.
Okay. But you do get that peace of mind that you don't have to deal with late night phone calls and toilets and repairs and locking themselves out, all these issues. You get probably $700 of monthly cash flow, which you're not getting from the regular real estate investing. And you get 5%, which is still a substantial amount because it's 5% appreciation on the entire property, right?
Compounded.
Yeah, it's compounded. And if you do compound investing calculation, I think our interest, like our property value doesn't go up really that high because typical people refer to appreciation using average, not compound rate. But you're referring it to using compound, so that's also different.
Exactly. So it still presents an opportunity for the investor to create profitability, but really rent to own is about consistency and kind of constant cash flow. Like, I mean, a lot of people in today's market, especially in today's market, are looking for certainty.
Yeah.
So rent to owns are as close to that cash flow that gives you certainty each month. You have a faithful home buyer who's on the hook to pay you each month because they have a burning desire to own that property. You're not dealing with renter mentality who are, volatile and looking for every excuse to say, no, I'm not going to pay on time. These folks know that if they don't pay on time, they compromise their ability to get into the housing market. So they're motivated to deliver and comply and become homeowners. So for me as an investor, that gives a lot of assurances that I'm going to have consistent cash flow to support whatever I'm involved in. At the time when we got started, my kids were in daycare. So a lot of my cash flow was going to cover daycare. And I have a lot of investors who use cash flow for something similar, or they have students who are entering university and college who are living off campus. Rent for student rentals is going up. So a lot of investors are using rent-owned properties to cover their student off-campus living expenses.
Oh, so it's not just a financing strategy for the tenants, but it is also some sort of a financing strategy for the investors from a cash flow perspective. That's great. Now, speaking of cash flow, we touched a little bit about it. You know how like the interest rate in today's market, the housing prices had dropped substantially. So what is the real estate market, like the rent to own real estate market like? It would be, I would imagine it is a lot easier to get in.
I wish.
Because, the price has dropped, so then there are more people interested in buying rent to own because they are looking for certainty, like you said.
I wish. We are really, this is a play for home ownership. So we're going toe to toe with all of these other aspiring home buyers who are also entry level. And as we know, inventory in the entry level prices in any market. I mean, we operate in Ontario, we operate in Alberta and Quebec. And in those markets, the demand for entry level housing is still high. And we're still dealing with multiple offers with no conditions and over asking.
Oh my God, really?
Absolutely.
So are buyers coming back to Ontario?
Actually, some buyers are tired of house hunting in Ontario and getting outbid, so they're now looking at doing a rent-own in Alberta instead. So we have a lot of migration considerations as well, and I have also the same thing happening from people who were house hunting in Ottawa, got frustrated with the bidding wars, and are now moving over to house hunting in Quebec because they're so close.
Even now?
Even now.
Wow, so I'm surprised. Doesn't sound like the interest rate hike is helping anybody at this point.
The interest rate hike is creating less affordability for people because part of our process when we screen home buyers for rent to own, remember, this is a people play. Less about property, more about people. So we need to make sure that the people can qualify under the stress test. And of course, as interest rates go up, the stress test is shrinking their affordability. So that means that they have even less options in terms of the properties they can go for, and sellers are not necessarily rushing to put up their properties up on the market because where are they going to go?
Yeah.
And it's creating a domino effect. So yes, to some degree, there's less competition out there. That's what the news is telling us. But when you look at the segment of entry-level buyers, they're still all competing for very few properties.
Well, that really doesn't help. I hope the government is watching my YouTube show. I heard that they have access to the internet too. So let's just hope that they also watch this show so that they know what to do with the interest rate. Now, for anyone who wants to find out more about this rent-to-own system or anything related to rent-to-own, how do they reach you?
They can visit our website at stoprentingtoday.ca.
Oh, cool. Stop renting. Oh, that's an amazing URL. Yes. Thank you so much, Rachel, for coming on.
My pleasure.
If you guys find that this video is useful or you like this video, make sure that you give us a thumbs up and hit the subscribe button below. Until next time, thank you for watching.